Hello everyone and welcome to this week's stock market analysis. Let's jump right into it. You can see here we had some volatility these past couple of weeks and it just seems to be getting more and more violent. And I mentioned last week if we have rallies that you should expect sellers to pop right in once we have them. 5% up here we had sellers coming in. If we go 5% down from here, expect buyers to come back in. That's what happens when the market is really volatile. I think I don't remember the exact numbers, but I think 11 of the past 14 sessions have had triple-digit moves on the Dow. That's pretty unprecedented. It's a lot of volatility. In fact, I'm going to bring up the volatility index for you. We were up 25% at one point, but we ended up closing up 17%. We're in the 30s now, and 30s are good for us options traders. We can actually make more money and then we can, when it's down here in the teens. So 30s is good. I think if we stay in the 30s, we'll be much happier overall for everyone, bulls and bears. It's when we get to those extremes that no one likes. So let's see here. I have a couple of things to talk about. This is probably going to be a short video. I'm going to bring up oil, show you what happened there. Oil has been just tanking. Literally just falling off a cliff here. It was up, 87, and now it's down. We traded in the 70s today for a little bit, but yeah, a good 17 points there, or $17 there. That's pretty crazy. I thought it never should have gone up there, but in fact, I was short up here for a while, and I ended up getting out. But it continues to fall. I'm gonna bring up. Let's see. Before I'm going to go to gold real quick. Everyone's going to talk about gold. I'll talk about gold too. So gold hit a new high this week, nominally, of course, 12, pretty much in the 1250. This is a mini gold because the regular gold doesn't have these. The candles don't look as good because it gaps up and down and stuff. But this is the one that's traded, around the clock. So let's see here. Today it was pretty darn volatile. I'm going to break it down to the 15-minute. You can see once we hit the new highs, we sort of teetered around here for a little bit, then we found big weakness. What is that, 30 points there from there, and then we kind of had this volatile action here. It's still trading right now, I believe. I think so. And yeah, so it's barely up right now. So let's go to, now I'm going to go to the currencies. Can't not talk about the euro. Look at the euro. It's just ugly. This is just a nasty chart. We're in the 23s now, and I'm gonna break out to the weekly on the euro to show you just how important the level we are at is. In fact, this is live. We continue to find selling right now, even after. I'm gonna break it back to the 15-minute. I'll come back to that. Look at this. We're at the lows right now. I didn't even realize that. Okay, so we're seeing this action. Let's go back out to the weekly. Actually, I need to go, let's go to 5 years. Okay. Now you can see how ugly that is, but you can also see that there is pretty significant support here back during the market crash in 2008. You can see the very lowest point we got was 23.26. If we get to that level and when we break through it, you can expect some further weakness ahead. If I kind of pan out over here, this is that same level. You can see there's significant support here. We had traded in this level for weeks before, and I think if we get below here, there's a couple levels of support before we get there, but it doesn't look so pretty to the downside. I'm not saying sell the euro here because you're selling practically at the bottom. I wouldn't sell this right now with my enemy's money. So that's the euro. I'm going to bring up a chart of my favorite currency, and that's the Australian dollar. I trade it all the time. I love it. So it has had some selling pressure too. I'm going to go back out to the daily. I've been wanting this thing to go up. I've been thinking about getting along, but every time I think about getting along, I look at the chart and it looks uglier and uglier. So if the stock market does correct, it seems like this is trading with it. Australian dollar is getting slammed too, so I'm not too inclined to get long right now. But a cool indicator I want to show you guys, which a lot of currency traders use, is something called Ichimoku. It's the coolest, most amazing technical indicator ever. The clouds here are support and resistance levels, and there's these moving averages. I know it looks like a mess, but especially with my trend line still in there, these are moving averages here. The green line, and I guess they call it pink, orangish pink right here. These can also act as support and resistance levels. When the cloud is yellow, that means, you know, expect it to go up. As long as we're above the cloud. We are not above the cloud right now. Since we broke out below it, it's actually a pretty good indication to sell. But I'm not willing to sell with the difference in interest rates between these two, between the U.S. dollar and the Australian dollar. I'm still not too inclined to sell this. Plus, if you break it out to the weekly like we had, okay, you can actually see that we're longer term. We're in an uptrend still on the Australian dollar. So I think longer term we will go up on the Australian dollar, but you know, I'm more of a short term type guy. That weekly chart is too long for me. So that's the Australian dollar. And okay, I want to bring up the S&P 500 weekly chart. I forgot about that. Oh, let me take that Ichimoku off. Some people use it with stocks, but not me. So okay, let's bring up the weekly. Where am I? Okay. Okay, you can see, you know, 50% retracement level. I'm not sure if I talked about this already. I think I did, maybe in a different take when I screwed up. But yeah, we're on the 50% retracement level here from the highs, and you can see you should expect to find some significant support and resistance at this 1121-ish level, 25 to, you know, this whole area here. It's a big support level. In case you're wondering why we keep finding buyers here, it's because of that significant support level. So that's that. I'm going to see if I have time to show you the stochastics and whatnot. I have to break it back out to the daily. Okay, you can see we are, you know, we corrected our kind of oversold conditions here. So it's pretty ripe for it to go back down. But it could, you know, still trend higher. Even though we crossed it over, we could still trend higher from here. You know, I wouldn't be a buyer personally, but you trade how you want to trade, not how I want to trade. Remember, I talked about the MACD last time, how it was way overblown. You can see it, you know, these darker ones, I mean, we're, you know, sort of trending up, but we had a down one today. So we'll have to see what the MACD does from here. Still, now it's, instead of being oversold, it's just kind of in selling momentum instead of oversold. So let's go to the RSI real quick. Same kind of thing. You'll see the same thing with all of these. Sort of corrected the, sort of bounced off the, I shouldn't say corrected, bounced off the oversold type conditions we had. And I think that's about it for the week here. I am going to be gone this next week, but I will try to update the blog as much as possible. I know I hadn't been getting to it, but I will definitely put on some trades and talk about those this week. The blog is derivativejoe.blogspot.com. You can, of course, just look in the description to this video and you'll find it. So that's it. Hopefully you have some good trades off of that quick information. I know it was kind of a lot to try to squeeze in there, but thank you very much and have a good week. Bye-bye.